With chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's going crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Financial Advisor at BIG Investment Services. That's BIG, Booth Investment Group. We're a full-service financial advisory based out of Dover, Delaware, serving clients all across America. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come, trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, November 15th, 2024. It is fight night for all of you tracking the Mike Tyson comeback. Should be interesting. Hey, let's just jump into the numbers. The market came off the boil this week. Things have been running kind of hot since the election. We saw everything kind of drift lower. Dow Jones down 1.2%, S&P 500 down 2%, the NASDAQ composite down 3%, and the Russell Small Cap Index down 3.9% this week. So a lot of the indices giving up about half their gains from last week. The volatility index did bounce back up a bit, up about 8% on the week, but it's still relatively tame. It's sitting at a 16.1 on the VIX. Not such a too terrible of a number there. And looking at the long-term bonds, they too down again, down 2.6% on the week on the TLT as long-term rates continue to push higher. And we'll talk about why in just a moment. Take a look at the different sectors of the market. We saw some strength in financials. Why? Because long-term rates continue to go higher while short-term rates continue to go a little bit lower. As that spread widens, banks do well. They make money off the difference between short and long. Helps them out quite a bit. So banks up 1.4% this week while the markets got clobbered. Energy also up 1% this week. Can't really say exactly why that is. Under the last Trump administration, energy did a little bit weaker just because energy prices came down as they drilled and pumped more oil. So the fact that it was up this week is interesting. We'll just kind of keep eyes on that. We do have some good energy exposure. Looking at other things, discretionary held in pretty well. Consumer discretionary, people spending money on things they don't need, but things that they want. And we saw a strong retail sales number today. I mean, a super strong retail sales number and a strong revision. So the consumer continues to hang in there. Utilities were flat on the week, but then look at semiconductors. If you listen to the show, you know that I keep a close eye on semiconductors because these chips are in everything. We got chips in our refrigerator and our oven. I mean, computer chips just seem to be everywhere. So when they're not doing well, it gets my attention, right? When the chips are down, did I just say that? Yes, I did. When the chips are down, I'm really tuning into that. They were down 7.5% this week. So a big move lower there. Maybe it's just some fear with China and tariffs, things like that. I don't know, but just watch that one pretty close. Healthcare also taking a big hit this week. Just concerns about the new administration and belt tightening in the healthcare sector, talking about capping prescription drug costs, things like that. So we saw some reactions to that today. And then everything else just kind of flattened down. And then gold and silver also down. Gold down 4.5%. Silver down 3.2%. Like, what's going on there, right? What's going on with gold? I do have a theory on that. I do think that gold ran up heading into the election out of fear of a sloppy election, a contested election, one that wasn't resolved right away. And now that fear is subsiding and gold has drifted back lower. But when it comes to the fundamental setup for gold, I still think it looks pretty good. You've got one party now that swept the elections, the GOP. There's really no restraint there if they decide to spend more money. You've got Fed cutting interest rates, right? You've got tariff conversations that could be inflationary. I think gold still looks good on a fundamental basis. So we're maintaining our exposure there, and we'll just kind of keep eyes on that moving forward. So what's moving markets? Well, you had some good economic data this week. And right now, the market's saying good is bad. Okay, why? The Fed has cut rates now 75 basis points, 0.75%. Okay, they cut 50 basis points last month, 0.25 point this month. And the market would like to see the Fed continue to cut rates, but the economic data is looking strong. it's hard for the Fed to make that justification and continue to cut rates, especially when inflation data continues to hang in there. And look, we had a hot PPI number. That's the producer price index. That's the wholesale inflation number. It was hotter than expected this week. It was also hotter than expected last month. So how much more time will go by before those hotter than expected wholesale prices start to creep into the consumer price index, which was in line this week, but it may not stay in line. So the markets, kind of keeping eyes on all of these things. And I think we saw that play out. We saw that play out with rates going higher on the long end. There's concerns there that the market has. We talked last week about our national debt and a little bit about inflation and things of this nature. So that's what's really kind of driving markets right now. And then also the markets are really trying to figure out what next year is going to look like. We're not going to jump too deep into that. We'll save it for our year-end outlook. But I will say that we're doing a deep dive and trying to explore areas of China supply chain exposure, right? So when it comes to companies that are sourcing their materials and products and manufacturing from China, if the tariffs go in place, that could be a bit of a gut punch. So we're doing a big deep dive on that and just checking our exposure. I can tell you right now, it's minimal, hardly any at all. We do have Alibaba in our models, but Alibaba, the tariffs have nothing to do with that, right? That company is selling to Chinese people and it's not selling to the U.S. So that's a non-issue. And that's a great looking company. It's so inexpensive. Some of the moves we made this week, folks, listen, we've had some big moves. I mean, some big gains on some of the holdings in our models. So for those of you that have tax sheltered accounts, IRAs, 401ks, which were managing your money, you saw some trimming this week. And I didn't do it for the taxable ones because I trimmed a lot of things that have some short-term gains. Short-term gains are taxed at your income tax bracket. Long-term gains are taxed at the capital gains rate, which is lower. And these were all short-term, right? So I trimmed Shopify. That's gone from $57 at the end of May to over $110 this week. They had a monster quarter. Stock was up 27.5% this week. We had ServiceNow we trimmed. That stock's gone from $644 at the end of May to up over $1,000. CrowdStrike, they had that blip there over the summer with one of their patches that they rolled out and caused some computer crashes. Stock came down hard. We jumped all over that. Last round that we bought was August 5th, around 210. End of the week at 336. But we trimmed these a couple of days ago because they were getting big. I mean, they've grown so much so fast. I want to kind of lock some of that gain in heading to the end of the year. So if you have a tax sheltered account, you saw some action there. And for those of you with taxable accounts, we just have to hang on to these things and experience a little more volatility between now and once we cross 1 year, unless something dramatically changes and I feel we need to get out sooner. So right now, that's where we sit. I mean, the market, I think we're heading into a seasonally strong period of the year. Technicals look interesting. They look a little toppy here. You've heard me talk about Tom DeMark and his work. I use his tracking service there to show exhaustion on the market when it's going up or down. When we get 9 and 13 counts on his charts, that's an indication that things are getting ready to turn the other direction. Look, we got 9s and 13s on the daily chart for the S&P 500. We've got a 9 and almost just a couple weeks away from a 13 on the weekly chart for the S&P 500. So that has my caution flags flying there a little bit. On the other hand, some of the other top technicians that we consult with suggest that the market's had a lot of breakouts here over the last couple of weeks, that any weakness that we might experience will probably be nothing more than consolidation, and the market should start to trend back up again moving into the end of the year. I like to see that happen. I can't say with great conviction it will. There could be a lot of pull forward here. So we could end the year on a whimper instead of a bang. I don't know. But right now, I like where we sit. So we're going to continue to hold tight, do some heavy homework here to make sure things are in line for us moving into 2025. I got some changes I'll be implementing. So doing a lot of work on that, having a lot of meetings, etc. More to come on that in upcoming weeks. So with all of that said, I'm going to wrap up. But between now and next we meet, as you're thinking about your future and long-term goals, all the things you want to do with you and your money. Maybe it's buy that new roof. Had a conversation this afternoon. Maybe it's buy new windows. Everyone's buying new windows. As Anderson's running out there just selling everybody windows, and my goodness, are they expensive. You could build a whole nother house on your property instead of buying windows and just move into it. I don't know. Anyway, look, whatever it is, don't just think about it. Think big. Think BIG. And I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.